Hi, hello, how are you? Once again, I am welcoming to all of you to this video lecture, and it's also very interesting. It is not useful for the academic purposes, also for the general knowledge purposes. Okay, so this is Dr. A B JENA, Senior Assistant Professor, PG Department of Business Management, Fakirmoni University, Basober, Balesur, Odisha. Once again, on the request of my dear student friends, I have prepared this video lecture. Okay, so without any delay, we will start our discussion. So, secondary market. So first, so left hand side, I have written there are the 13 bases for the comparison. So first one is, without any delay, we will start our discussion. First one is meaning. What is the meaning of the primary market? It's very interesting. So primary market, it is a financial market. Both are the primary market as well as the secondary market. So they are playing a vital role in the Indian financial system. Primary market, it is a financial market where the issuers means the company. It may be the Reliance Industry, it may be the Wipro, it may be the Nalco, it may be the Shell. So they will sell or issue the new share to the public. Who are the public? You, your friends, the public. And in the case of secondary market, it is a financial market where the securities. It may be the share, debenture, bond, securities that have been previously issued are sold. In where? The place, it's the stock exchange. Come to the second basis of comparison, other name. Other name, the synonyms of primary market, it is the new issue market. Dear friends, so primary market is also known as the new issue market, whereas the secondary market, it's known as that is the share market. We are always getting the share market information in print and electronic media. Okay, in televisions or in the advertisement, also in the English newspaper as well as other regional newspaper. It's also known as that is the stock exchange. Then what are the different types of financial products are normally sold in a primary market? So the financial products include the IPO, initial public offer. In the next video, so I have already prepared one video. You can you will know more and more, and initial public offer and FPO. So it's that is the further or follow public offer. And in the secondary market, the financial products are normally the shares, share warrants, and the derivatives. In next video, we will discuss in detail about what is the share warrants, share certificates, and the derivative markets. Okay, then what are the frequency of selling? So on the basis of frequency of selling, the primary market is only once. Whatever the sellings of securities, it will be done for once, whereas in the secondary market, the sellings of the financial products can be as many as possible. Next one, basis of comparison, it says that is the parties involvement. Who are the parties? So in primary market, the parties are normally the companies and the investors, whereas in the secondary market, the investors will buy and sell among themselves. Next one, what are the different types of purchasing? In primary market, the investors can directly purchase from the company. The investor directly purchase from the company, whereas in the secondary market, so the trading means the buying and selling of securities. Once again, I am repeating, the trading means the buying and selling of securities will be or is done between the investors. So next one, basis for comparison, it says that is the beneficiaries. Who are the beneficiaries? In the primary market, the beneficiaries are mainly the companies, so they will raise the fund by selling or issuing the securities, whereas in the secondary market, the beneficiaries are the investors. So next one basis of comparison, it's the identification of identifications of the investment. So how an investor will identify the investments? In primary market, the investor will rely upon the prospectus. You know, the company will issue issue or sell the securities or the shares or debenture through the prospectus, and as well as so we will go through the publicity about the advertisement, and we can, or you can also directly go through the company website, you can get the information more and more. But in the case of the secondary market, several methods will be taken into consideration. What are the, so it's a very important, price to earning PE ratio, and the price to book PB, and price to sales, etc. So these are the methods, or these are the techniques will be adopted for the identification of the risks. Next one, the basis of comparison is that is the intermediary. Intermediary means it's the middleman or the agents. So here in the primary market, the intermediaries are the underwriters. So underwriters, so they are the specialized financial institutions. They can subscribe the unsubscribed securities remaining. I mean the company unsubscribed share capital or the capital will be subscribed by the underwriters. Then secondary market, so they are the intermediaries are mainly the brokers. In another video, we will discuss in detail what are the functions, the many types of the brokers. Then next one, basis of comparison, objectives or the purpose of both the market. The primary market, the company can raise the capital for its growth, expansion, diversification, modernization, acquisition, etc. As we know, the primary objectives of the business or company is not to maximize the profit, but also the other objectives are the growth, development, expansion, diversification, modernization, and acquisition, etc. The purpose is the trading. Trading means the buying and selling of securities, and the investor also avail the liquidity. Liquidity means so without losing its monetary value, the securities can be converted into the cash. Then the price, another basis for comparison, it's the price. In the primary market, the company sells the shares at a fixed price. It's the fixed price, and most important are the features of the primary market. Whereas in the secondary market, so there will be, or there is the demand and supply. Accordingly, the price will be discovered. Demand and supply. Another basis of comparison is that is the existence or the presence. There is no organizational setup like the secondary market. Okay, let's friends come to the secondary market. Secondary market has the geographical setup and the organizational presence or the existence, or so these are popularly BSE and NSE. BSE, that is the Bombay Stock Exchange, and NSE, that is the National Stock Exchange. Last but not the least, the basis of comparison and the rules and the regulations. These are very vital, not only for the primary market but also for the secondary market. So in the primary market, a company follows a lot of rules and regulations, and given by the SEBI. SEBI, you know, the leader and the godfather of the investors. It stands for, it's the Securities and Exchange Board of India. And also the due diligence. What is this? So due diligence means it's the audit or investigations conducted by the company with regard to, that is about what is the demand or the potential product, or that is the investment. And so here in a due diligence, it's the company will review all the financial records before making any agreement or contract with the another party or another company. Whereas in secondary market, the investors and the brokers follow the rules and the regulations given or set up by the stock exchange as well as the governing agency. And say the SEBI. So these are all about our discussion difference between the primary market and the secondary market. So once again I am requesting to all of you, kindly you like it, kindly you share it, kindly you forward it, and kindly you also subscribe it, and the PDF of this video lecture is also available in the description box. Thanks a million.